Good morning, everybody, and welcome to our webinar on IFRS 17, the final stretch. For those of you who don't know me, my name's Simon Sheaf, and I'm a partner in Grant Thornton, and in particular, I lead our non-life actuarial and risk team. Thank you very much for joining us this morning. I ought to make a couple of housekeeping announcements to begin with. So first is that we will be recording this seminar, this webinar. So hopefully you're happy with that, but I just need to let you know so that if you're not happy with it, you can leave. Hopefully we won't see a mass exodus at this point. The other thing to say is we're obviously recording this from various remote locations and a number of us at home and so on. So please forgive any unexpected interruptions, be they small children, animals, aliens landing in the backyard, and anything like that. If we can just, sorry, the other thing I should say is that you'll be able to see a control panel on the right-hand side of your screen. And that's where you can submit any questions you've got during the course of the seminar. Yeah, I was going to say, we decided to call this session the final stretch, because obviously we're in the last 8 months before implementation. After much debate, the image on the screen was what we came up with to represent the final stretch. I was in favour of a prison-related theme with a prisoner behind bars which were labelled IFRS 17, but for some reason I was outvoted on that. So we've gone with the picture on the screen. Anyway, if we now turn to the agenda. We're going to start off in a moment with some insights from the UK endorsement board. And I'm delighted that we've been joined by Seema Jamil O'Neill and Giles Mullen for that session. We will be at the end of that session doing a Q&A with the two of them, so please submit your questions. And then after that, we'll have another sessions on transition readiness and market disclosure and stakeholder training, followed by a few minutes for more Q&A. So a packed agenda, and I hope you're going to find it interesting and useful. Okay, so kicking off, as I say, delighted to be joined by Seema Jamil O'Neill, who's the Technical Director at the UK Endorsement Board, who's kindly agreed to talk to us this morning. Also delighted to be joined by Giles Mullins, who's on the UK Endorsement Board. But having said that, because Giles actually works at Grant Thornton, he probably had less option to say no than Seema did. But anyway, really grateful to both of them. Like I said, we'll be doing a Q&A for them once they finish speaking, because I can't stay to the end of the webinar. So please, like I say, submit any questions you've got in the panel on the right-hand side of your screen. And with that, let me hand over to Seema.
Thank you, Simon, and thank you to Grant Thornton for actually inviting us to speak to you about the UK Endorsement Board's work around IFRS 17 endorsement and adoption. Funny that Simon should make prison analogies, because I sometimes see this as a life sentence. Certainly, I have been involved in IFRS 17 in one way or the other since about 2006. So that is rather a long time, I would say. Anyway, I think we are coming towards the end of just talking about IFRS 17 and actually potentially implementing. So I'm the technical director, and Giles so I will provide you with the perspective around the work that we've done on IFRS 17 adoption, and Giles here will give you the board's perspective of their views around actually the adoption itself. So we'll just do a tag team between the two of us. So on the next slide, if I could go to there. So a lot of you may be just sitting there thinking, who is the UK Endorsement Board? Never heard of it. So I thought I would just do a very brief intro. Do go to our website, which does set out sort of much more detail, and more detail on that a little bit later on. But just for those of you who were aware of the fact that actually international standards have to be adopted for use in the UK, may have been aware that before EU exit, it was the adoption process was undertaken in the EU. So UK stakeholders tended to influence EFRAG and European Commission on their decision, who in turn had sort of a much more direct interaction with the IASB itself. At the time of EU exit, of course, a lot of that legislation that enabled that process to continue in the EU had to be onshored into the UK. And UK government decided that it was going to onshore the adoption mechanism for IFRS that was operative in the EU for use in the UK. It also added an additional statutory function, which is to do with influencing the development of IFRS, and that sort of recognises the importance of the influencing function as well. But at that time, so those statutory functions were in fact transferred to the Secretary of State in the UK, because those powers sat with the European Commission. And the Secretary of State in turn delegated them to the UK Endorsement Board, which was a new body set up at that stage. And one other thing just to mention at this stage is the overriding objective for adoption of IFRS is to, and this is set out in legislation itself, that it is to ensure a high degree of transparency and international comparability of accounts, and ensuring the efficient allocation of capital and smooth functioning of UK capital market. And this was in recognition that UK wanted to continue to be internationally facing and focused. So I think that this is all I will say here, but I was just wondering whether Giles wanted to say a little bit more perhaps on the influencing function in particular.
Yeah, thank you, Seema. I think actually the starting for insurance accounting was back in the 90s, I think, Seema, when it first, I think the ISC started talking about it back in the 90s. So I think it's more than just it feels more than just a gel analogy. It's been a very long time. But yeah, I think for me, influencing is one of the most important parts of what the UK Endorsement Board, and it provided a particular challenge around IFRS 17. But by that very timeline, the UK Endorsement Board wasn't able to influence is what it would normally be able to do. And by influencing, what I mean by that is the standards developed and thought about by the IASB, actually, stakeholders have a chance to influence what it will look like before it actually gets out for consultation. So obviously, if the UK Endorsement Board was delegated powers in May 21, obviously a lot of the standard was being developed well ahead of well before that. So actually, influencing is really for two functions for the UK Endorsement. One is about influencing a standard, but secondly also about giving the UK a voice on international accounting standards. It's a very, very important part of what we do.
Well, thank you. And so on the next slide, and I think just to demonstrate how seriously the board takes the influencing function, this slide shows you that the UKEB has been in operation for just about 11 months so far. And you can see I just wanted to demonstrate how much work it has already done on the influencing space. So these are all of the comment letters that we have actually sent to the International Accounting Standards Board on projects that were active on their agenda. And this is just in 11 months. Clearly, to me, it feels like a lot longer, but there we go. But I wanted to focus actually on the next slide, because we are obviously talking about IFRS 17. So on the next slide, it sets out the overview of our project itself on IFRS 17. So again, UKEB has only been in place for 11 months, but this is a huge standard, as a number of you would be very, very acutely aware that its impact is going to be quite significant, in particular for insurance companies. So we were very aware that the adoption will be a huge, will require a big project. And I think so by comparison, the EU's taken about 4 years to actually formally adopt this standard. So we sort of knew that we were in at the deep end. The Secretariat had started before the board was actually in place. So we were very clearly thinking about the different issues that may need to be considered. So as part of that, a technical advisory group of industry experts was set up, and they were incredibly helpful in coming up with both UK specific issues. So we were aware of the European issues, but we weren't fully on top of what the UK specific issues were. So they were helpful in helping us identify the UK specific issues, but also which ones were of a higher significance in the UK and other issues that were of interest, however, potentially were either implementation challenges or things that had already been resolved. And we as staff certainly, and I know the board itself as well, have been very, very grateful for that input from the advisory group itself. But on top of that, the staff did a significant amount of outreach with stakeholders across the industry. So that includes preparers, auditors, investors, and we had a significant amount of outreach with investors, as well as others like rating agencies and actuaries and others with an interest and expertise in this area. Again, I have been really taken aback at the extent to which people have been providing that input. It's been very, very gratefully received from our perspective. And all of that input was incredibly valuable in us being able to be very clearly articulate to the board all of the different issues in the UK, and then drafting of the draft endorsement criteria assessment, which some of you may have seen, which the board published in November for consultation. So I wonder whether Giles wanted to just talk a little bit about perhaps anything here in terms of his experience of looking at the UK specific views on insurance.
Yeah, I think I'd call it a baptism of fire for board member. You're coming in May, and what was really great was the amount of work that had been done by the Secretariat before that, and really that can only happen due to the stakeholders and technical advisory group that were really, really helpful to that. So I think my comment is really to repeat your thanks, really, Seema. It was really, really helpful as a board member. You feel like those issues had merged at that point, and then the board could then stress test those issues, which is what it effectively did from May onwards.
And then one last point to just make here is that the added pressure for the board and also the staff was that all of the UKEB discussions are all in public. But I think the benefit of that to stakeholders is you can go and find them on the website. You can go and have a look at our detailed papers, and it actually explains to you the rationale for the decisions that have been taken. So you've got a track record of all of the decisions if you were ever to go and want to sort of get more clarification. So on the next slide, I'm just going to go into a little bit more on the technical accounting assessment that we undertook as staff. So I mentioned to you the draft endorsement criteria assessment, and that that acts as a single document and single point of call of all of the issues that we have considered for UK that were significant from a UK perspective, and then how the standard itself was assessed against the statutory criteria themselves. The key element of the assessment is against the technical accounting criteria in the legislation, and those are to do with understandability, relevance, reliability, and comparability. Again, I think I can't reiterate enough how much the analysis that we got and input we got from the Insurance Technical Advisory Group, how helpful that was. And that helped us identify 4 key priority issues. And they're on your slide here, so I won't go into a huge amount of detail, but they were to do with CSM allocation for annuities and bulk purchase annuities, the treatment of inherited estate and with profits business, and in particular this related to the shareholders' share, the annual cohorts requirement, and discount rates. So these are issues which, although they're essentially technical in nature, they also have to be considered in the context of the potential impact on the sector itself. So a common theme is the importance of disclosure. So it will be really important for insurance companies to very clearly explain how they account for their specific products and what the impact on their accounts is. And they will have to get used to doing so in a way that is transparent and understandable, and sort of communicates the transactions that they are undertaking. So I don't necessarily plan to go into any huge amount of detail. It is all in the ECA. If you're really interested, go and have a look at it on our website. But just perhaps it's worth mentioning a couple of points on the CSM allocation point in particular, because this is the one that has been of significant concern in the UK. So this is an issue on which stakeholders have very strong views, but one thing I will reiterate is that those views are very mixed. And we obviously acknowledge this is a difficult issue, but ultimately I think the UKEB's assessment is that this is essentially a matter of interpretation. And those of you who've seen what's on the Interpretation Committee's agenda would have seen that the International Interpretation Committee is actually looking at this issue in particular. From the UKEB's perspective, I think the principle set out in the standard is clear and appropriate. The difficulty is working out how to apply it in the specific cases of annuities and bulk annuities. So we will continue to follow the IFRIC committee's views on this, but I think the view that we've taken, and certainly as staff have advised board, is that this is this should not stop the adoption of IFRS 17 itself. I don't know, Giles, if you had any views on the technical assessment.
Yeah, I think the CSM issue was undoubtedly it is troublesome for stakeholders, but as Seema said, the views are really mixed. I think as a board member, what we have to go through is that finely balanced distinction between interpretation and endorsement, and that's really quite it's not an easy one, that actually. And I think what we will do as a board is keep very close to the IFRIC agenda decision and monitor this closely. But that's the key, is endorsement versus interpretation, and we are an endorsement body rather than an interpretation committee.
So on the next slide, you will see, so this is another quite significant element of the endorsement criteria assessment. And this is a specific requirement in legislation for the board to consider the impact on the long-term public good of adopting a standard for use in the UK. There are 3 elements to this. So the aspect around quality of reporting is actually, as technical accountants, that is a more straightforward thing that we can address. And from our perspective, this was a straightforward comparison between what is currently required under IFRS 4, what would be required under IFRS 17, what does reporting look like under the 2, and does the reporting under IFRS 17 demonstrate an increase and an improvement in quality of reporting. The second element is to do with the economic impact, and that is a little bit more challenging, certainly as accountants. Luckily for us, we actually have an economist on our team who was particularly helpful in some of this work. And in this space, we have worked both with our economists and also with the board to identify the key issues in relation to products, pricing, impact on competition, and any macroeconomic issues as well. And the last thing, and that is also quite important, and again is specified in legislation itself, is to do with a cost-benefits analysis. And if you go into our ECA, you will see there's a specific section that actually relates to the cost-benefit analysis itself. So the feedback that we received, though, did indicate that IFRS 17 is not expected to result in significant additional ongoing net cost. And I do underline the ongoing part. I understand that on implementation, there may be significant costs, but the question is very much about on an ongoing basis. And the assessment that we have is that actually the significant increase, there isn't a significant increase in ongoing costs. So overall, and looking at the long-term net impact, I think the feedback we received indicates IFRS 17 is not expected to actually negatively impact on any of these areas. And benefits are, of course, harder to quantify, but they can't be ignored. And most certainly users of accounts are clear that IFRS 17 will bring long-term and urgently needed improvements in reporting terms in particular. Giles, did you have a perspective on the long-term public good? I know this is a challenging part for the board to think about.
Yeah, the most challenging, I think, is actually thinking about the other way. What happens if we didn't endorse IFRS 17? Actually, what's the impact on UK insurers in the global markets if we didn't endorse IFRS 17, or indeed there was some sort of carve out? You know, it's a different perspective. I think you've done a good, complete job there of seeing explaining, but I think the other side of it is really interesting and took some time to get our heads around as well.
Thank you. So on the next slide, I think it just sort of highlights to you the tentative conclusions and endorsement status. So, and I won't read those out. You can read the tentative conclusions, they are on the slide. But I just wanted to just take a moment to talk about where we are current status wise. So, I mean, this webinar is at an opportune time because the board meeting on the 21st of April completed the consideration of the CSM allocation for annuities and actually tentatively decided that they were content with the assessment that was included in the endorsement criteria assessment and the feedback statement. So now the board has a couple of weeks to just sit back, think carefully, and then early May, I understand on the 9th of May, in fact, hot off the press, we have a special board meeting scheduled where the board will be making their final decision whether to formally adopt that standard or not. And just to remind everyone, the board meetings are in public. You can register to attend the live board meetings via our website if you are interested and you want to be there in the momentous space of UKEB formally adopting IFRS 17 for use. Giles, did you want to comment on this?
If you want to look at past board meetings, they're even on YouTube, Seema, aren't they? Which is my first YouTube experience.
I know, and we get people watching them, so it's always it must be quite interesting. So I think this is all I have to say on IFRS 17. I will just take one more moment on the next slide to just highlight to you. So these are the active UKEB projects. Obviously, you'll be saying IFRS 17 is done. What are you doing? I just wanted to share with you. So the next major endorsement project that we'll be undertaking is to do with rate-regulated activities. It is currently in the final stretches of IASB actually formally finalizing it so they can formally publish it. As soon as they've done that, we will need to then very carefully consider whether to formally adopt it for use in the UK. And then the other projects, especially on influencing, that we are starting to undertake are to do with IFRS 6, which is the exploration and evaluation of mineral resources, or as I call it, extractives, and then also the new ISSB's 2 exposure drafts as well, which the board has also started considering. And then the board also has a couple of research projects on its agenda. One is to do with subsequent measurement of goodwill and whether the impairment model is still workable. And the second one is a slightly longer term project in relation to intangibles accounting. I won't say a huge amount at this stage. Giles, did you want to share any views on any of these projects?
I'm conscious of timing for Q&A, but I would say if you want to get involved in any of these, just reach out to us. I'm particularly passionate about goodwill and intangibles, so we would love to hear from you about that.
And thank you for that. And here's our, as you can see, all the ways that you can get in touch with us. Please feel free to use them. We're very happy to hear views from stakeholders, as that is how we go forward on things. So thank you very much for your time. Happy to take any questions if you have any.
Seema, Giles, thank you very much for that really interesting and informative session. Giles, I was impressed that you're now on YouTube. And I have to say, we have in the past put some of our webinars on YouTube, and I have never had so much street cred with my daughters as once I realised they can find me on YouTube. Anyway, we do have a few minutes for some questions for Seema and Giles. And I've received one here, which is a really good question, but it's slightly long, so forgive me. It's how influential is the IFS Interpretations Committee? Do they simply give advice, or is that decision set in stone? And the question goes on to say that on CSM allocation, some insurers have been uncomfortable with their tentative conclusions. So are they able to just ignore them, or do they have to follow what they say?
Would you like me to take that, Giles?
I'll follow, yeah.
Okay. The IFRS Interpretation Committee is in fact reports to the IASB. It's set up by the IFRS Foundation, and its role is specifically to provide interpretation of standards in relation to specific issues that may be arising when it comes to implementation of particular aspects of the standard. So their role is very much confined within the standard itself. So if, and it is to say whether the requirements of the standard are clear or not, given a certain scenario that may have been shared with them. They have a number of options available to them. The first one is to actually provide an interpretation, which they do open for consultation. Stakeholders are very, very welcome to go back and respond to them if they disagree with their conclusion, draft conclusions. The second part is for the second option they've got is actually if there is a problem with the standard itself to refer to the IASB. But in terms of can you ignore their final conclusion, I would say no, you cannot ignore their final conclusion. It is the final interpretation of that standard, and it will be applied internationally. So it's not one to ignore. But if you have got objections, I think you'll have the ability to write to the Interpretation Committee directly.
Thank you for that. I guess we've had another couple of questions on the Interpretation Committee, and in particular that consultation, asking how you intend to respond to it and when you'll be responding to that consultation.
Giles, or do you want me to go?
No, go on.
Okay. So I can tell you, so the 9th of May is the UKEB is going to be formally doing their adoption decision. Obviously, it's for the board to decide whether they're going to adopt or not. So we can't really preempt what that decision may be. But there is a subsequent normal board meeting scheduled, I think, for the 19th of May. And our intention is to bring a draft comment letter for the board to consider in terms of responding to the IFRIC committee as well. That is what the UKEB will be doing. And then I think there is a question about how soon after 9th of May will you finalize your endorsement decision. That is the final decision on the 9th of May in terms of the board giving its tentative advice. There is an element of process involved there. So the board has to give their formal written votes straight after. Our intention is to try and finalize that as quickly as we can. As soon as we have all of the final written votes, we then are required to publish them within 3 working days. So I'm hopeful that it will be a very, if the decision goes through on the 9th, that it will be a very quick process after. I'm talking a matter of maximum a couple of weeks. Obviously, any unforeseen circumstances permit, I can't really comment on those, but that's my expectation.
I don't think the board's formally decided whether or not to respond to the IFRIC interpretation conclusion or not. But and I can't speak on behalf of my board members, but I think it would be, as a personal view, it would feel right that we should respond. But that is a matter for the wider board at the time.
Great. Thank you both. I'm conscious I'm taking more of your time than I promised, but we've just got one last question, which I suspect is going to be very quick to answer, which is whether the UK Endorsement Board is going to delay the effective date of IFRS 17 for UK insurance.
Can we say that?
Go ahead.
Well, our draft endorsement criteria is out in the public domain. You can see what that says, but it's not a matter. The board will determine its decision on the 9th. We can't preempt that. So I don't think I can say yes or no really. But you can see what our draft endorsement decision is in the public domain. So is that okay, Steve? Right on the right protocol there.
Thank you both very much indeed. Apologies for having overrun slightly the time I promised, but like I say, Seema and Giles are unable to stay for the rest of the session, but I just want to thank them hugely for their time this morning, for what's been really informative and helpful session. Thank you very much indeed.
Thank you.
And on that note, we'll move on to transition readiness, and I'll hand over to Natalia, who's going to talk about that. Natalia.
Yeah, thank you very much, Simon. So I'm Natalia Mirin, a life actuary at Grant Thornton, and I'll briefly talk to you about transition readiness indicators today. Yeah, and we'll start with reminding ourselves the IFRS 17 timeline. Insurers have done an enormous amount of work over 2021, progressing with the transition and implementation of IFRS 17. Currently, we entered 2022, which is the preparation opening balance sheet day, and over this year, companies will have their transition dates, which is the start of period prior to the implementation. And starting from 1st of January 2023, IFRS 17 goes live, and companies will have their less full interim reportings, whether quarterly or half yearly over that year, and upon completion of the year, full annual IFRS 17 reporting. I also would like to note that this current year would be challenging in terms of workload, as companies need to continue to report under the current IFRS, but hopefully this will become more manageable from next year when the current IFRS reporting will be out of the way. Next slide, please. We have gone to the market, we read a lot of information, observed what companies publish, and also talked to a number of insurers. And as a result of those conversations, we have put together this pyramid with some high-level transition readiness elements. And I'll talk briefly through them, starting from the bottom. And we ranked them in this way by the perceived time these readiness elements will be taking insurers over this year. And the first block in the bottom is results validation and controls. This actually goes together with the second process documentation block. Over this year, companies are finalizing preparation of their transitional valuation, to the auditable quality. Say companies have been engaged with auditors closely over the last couple of years, but this year that engagement is even closer. And so that preparation flows to the second step, process documentation, as not only results need to be of auditable quality, but processes, how we arrive to them, how we arrive to certain conclusions, and processes for going forward need to be documented and have taken through as a minimum in companies' internal audit function. But in many cases, companies engage independent internal auditors to go through the documentation and governance structure that is being set up. So the next block is modifications and simplifications. And examples of tasks within this block would be, first of all, the big task is setting up materiality frameworks under which decisions are made in respect of modifications and simplifications. And also, like, for example, when companies had a good go on valuing certain portfolios under retrospective approaches in order to obtain more accurate transitional CSM values, but actually found out that it is likely to incur undue costs and efforts to proceed with retrospective approaches. Now, under those set up materiality frameworks, potentially those decisions are being changed, and simplified approach, like fair value approach, may be adopted to certain portfolios. Reporting templates. Next block. So in this space, insurers have done a lot of work on design of draft reporting templates. And over this year, we see on companies' plans to actually try and populate within the preparation of opening balance sheet exercise, to try and populate those reporting templates and populate them not only with actuarial valuations, but populate them in a way they would actually be published and submitted to FRC. So this attempt would, or this exercise would have portfolios, cohorts, templates, their combination insurance, reinsurers, as well as combined disclosures, including combination of life and non-life business for composite insurers. The next block is transition to BEU. So every insurer has smaller or larger, mainly larger internal or external IFRS 17 transition teams that help them support and implement IFRS 17. And over this year, that knowledge needs to be passed into the business as usual reporting teams, and a number of companies started that process already, but we acknowledge that it would not be an overnight process. Training and passing documents and implementing processes, business as usual, take time. And the top of the pyramid, the last but definitely not least, is the key metrics and disclosures. So this is the top. This is the front page of annual reports under IFRS 17. These are key performance indicators that people who look purely to the front page will see. And over the last couple of years, there were a number of articles. Companies considered what their key performance indicators would be under IFRS 17, and considerations were given to the CSM, risk adjustment, their release profiles, variety of business indicators, proportion of onerous contracts, profitable contracts, and within this year these indicators, that masses of indicators under considerations, need to be condensed, and companies need to decide what will actually go to their front page. Next slide. And briefly on this slide, this is a red, amber, green readiness status map, which resulted from the same market observations and conversations with insurers. And the chart shows the proportion of insurers within each red, amber, or green stage in respect of readiness indicators below. Again, the readiness indicators are of a very high level, and if we start from the top, for example, stage of transition and implementation, we found that around 60% of insurers are in this amber state, having a good number of tasks to do over this year in respect of transition and implementation. And this purely reflects the fact that IFRS 17 is a big project, and there are a lot of tasks to do to complete it. There we had a small number of companies that said that they completed or nearly completed transition, and really good for them, and a small number of companies that needed to catch up on certain elements. Next indicator down, methodologies and approach. And as we expect, about 80% of companies agreed their methodology, finalized their methodologies, agreed them with auditors, and having just a few final details left over. Next one down, governance and controls, and the chart reflects that companies are working on their governance and controls. They're moving to readiness of that governance framework. Market announcements. Here we based our indicators on how much companies announce to the markets, and Bhavin actually will be talking after me. My colleague will be talking after me, and he will give much more details on market announcement, more detailed study. Strategic solution, we marked everything as green, as we see all companies have decided on what systems they will use and the way they would use those. They continue work on implementing them. And the last category is outstanding issues, where the color coding was based on the number of key outstanding issues companies have to sort out over this year. Right, that's it from me. Simon.
Thank you very much. Thank you very much, Natalia, for that. Really interesting. Let me now hand over to Bhavin to cover our last session of the day.
Thanks, Simon. Thanks, Natalia. Hello, everyone. My name is Bhavin Bhatt. I'm Associate Director, and I lead Insurance Accounting Advisory Team in Grant Thornton. In this session, I'm going to talk about disclosures relating to IFRS 17 project in your 2021 and 2022 annual and interim financial statements. And as Seema and Natalia alluded earlier, how important it is to provide appropriate disclosures in the financial statements. So on this slide shows key timelines for financial statements, and I'm planning to go through the IAS 8 disclosure. So IAS 8 is an accounting standard that requires disclosures of the expected impacts on the financial statements for the new accounting standards such as IFRS 17 and IFRS 9, for example, that are issued but not yet effective. So prior to applying IFRS 17 in 2023, the insurers need to disclose expected impacts of initial application in line with IAS 8 requirements in both 2021 and 2022 financial statements. So let's quickly move on to the next slide. So next slide shows what are the key requirements in terms of disclosure about new accounting standards. So what things you may disclose. So the key things are title of new IFRS, so is it IFRS 17, IFRS 9, key application dates, And key requirements of IFRS 17 includes main measurement models applied by an entity, material changes expected due to IFRS 17, description of significant changes in accounting policies having an impact on opening balance sheet, and overall project status, key choices made. For disclosure of quantitative impact, insurers need to consider whether figures have been reasonably estimated in line with IFRS 17 requirements, have they been through appropriate internal governance and external audit, and so on. So disclosures will require judgment to determine what information to provide, for example, quantitative or qualitative or both, depending on the information insurers can reasonably estimate at the point of preparation. Now on the next slide, we have done a survey of 20 insurers who published their 2021 annual report to see what disclosures they have provided for their IFRS 17 project. So so on the left hand side are the key criteria that we would like to see, and out of 20 what they have disclosed. So red is they haven't disclosed, they haven't provided enough information, and green is they have provided some information. So starting with quantitative impact, none of the insurers that we surveyed have provided any quantitative information. Given it's only 1 year or 8 months to go, I would have expected insurers at least to give some kind of quantitative indication of impact of IFRS 17 on their opening equity or profitability. But again, it may be a bit early at this stage, because they may not have the reliable information at this point in time. But we would expect this information maybe in 2022 annual report. Second factor is, the second point is qualitative impact. 11 out of 20 have given some qualitative impact of IFRS 17 on their financial statements. Some of them have said it is going to have significant impact on opening equity. Some said, I think a couple of non-life insurers said it won't have any material effect. Some gave a bit more information on that, so that's 11 who have provided information. The remaining 9 didn't give clear-cut information on the qualitative impact. Next one is IFRS 17 project costs. How much insurers are spending in implementing IFRS 17, and only 3 insurers have given indication of how much they are spending on IFRS 17 implementation. Others have remained silent. A bit disappointing. I'd love to have seen more information on the costing, how much IFRS 17 project is costing insurers. So yeah, I think hopefully we may see more information on that in next year. And the measurement model they have applied, it's kind of 50-50. 50% have clearly said which measurement model they're going to apply. Remaining insurers have remained silent. And in terms of project progress, 13 insurers gave clearly like where they are in terms of project, what they are doing right now, refining methodologies or completing final dry run and so on. And then last 2 items are impact on solvency position and impact on dividend. Only 2 insurers have clearly said it won't have any impact on their solvency 2 position and dividend paying position. And remaining 18 have remained silent. Sometimes if you don't say anything, it's a bit frustrating from a reader's or financial statement perspective. They don't get enough information from the annual report. So that's a quick run through of our survey from 2021 annual report. Now if we move to next slide. Next slide is on interim reporting. So what we can expect in 2022 interim reports. And interim report will be under IAS 34, which is another accounting standard, and disclosure requirements are less as compared to annual reporting, and entities will need to include explanation for IFRS 17 project that are significant to understand changes in balance sheet and P&L since last annual report. So key things that we would expect is some kind of quantitative impact, major updates from the last annual reporting period, additional IFRS 17 cost incurred since the last annual reporting period, and any other useful information that was not previously provided. So that's what we would expect in 2022. If we move to the next slide, please. Next slide, please. Yeah. So what we can expect in 2022 annual reporting cycle. So this slide shows what information we can expect, and generally, as you move closer to implementation date, you would expect more information on the relevant aspects that are material to financial statements. This is because stakeholders such as shareholders, analyst community, regulator may want to understand financial impact on the financial statements. This determination should consider information an entity has available based on particular circumstances, and this requires again judgment in deciding whether to provide quantitative, qualitative information or both, depending on the level of readiness. I will quickly touch upon a few points from this slide that market may want to see in 2022 annual report. So firstly, transition approach, how a particular transition approach is impacting the opening equity. Secondly, impact on KPIs or alternative performance measure. Have they changed any KPIs or has the company come up with new KPIs? And impact on the risk adjustment and discount rate methodologies. And again, overall status of implementation, cost incurred to date, and impact on dividend policies and solvency position. I think those are the key things that we would expect in 2022 annual reports. Now, moving on to the next topic, which I think is most important but often sidelined, is on stakeholder training and communication. And as you may have heard from Seema and Natalia, that is important to identify, engage your stakeholders. So so on this slide, I've listed the stakeholders, different type of stakeholders. I think it is like widely understood now that stakeholders will need education and get up to speed with IFRS 17 numbers, but insurers are focused on getting things over the line from implementation perspective. That is from a solution and process implementation perspective, testing those things. And as a result, based on my experience, a lot needs to be done with respect to training and education and market communication, given we are just over 3 months away from the go live date. And I would expect project team may need to look for wider stakeholders, both indirect as well as external stakeholders. And as you can see on this slide, I would expect a stakeholder identification matrix to be completed if it's not already done. Identifying indirect and external stakeholders are important, as some of the stakeholders may require detailed and others may require like only high level training or understanding of IFRS 17. Further categorizing those stakeholders into high, medium, and low categories. This will help you determine what sort of training they will need, and then develop relevant communication strategy. And again, this helps you in terms of what to communicate, how often to communicate until first reporting under IFRS 17, and communication. Again, depending on stakeholder, may include information on what IFRS 17 is about, what changes insurance planning to make both operationally and from financial reporting perspective. I understand some insurers are planning to produce a separate document detailing impact on transition to IFRS 17 to help stakeholders understand changes on transition to transition. And therefore, in run-up to implementation, it is important to fully educate your stakeholders on IFRS 17 and how results would differ under IFRS 17. Conscious of time, and that's all I wanted to cover on this slide. And with that, I'll hand it over to Simon. Thank you, everyone.
Thank you very much indeed, Bhavin. We now have just a couple of minutes left for questions. So if you've got any questions, do you want to type them in the box on the right-hand side of your screen? In the meantime, while we're waiting, I guess I'll ask Bhavin a quick question. Which is, you mentioned that in that 2021 accounts, none of the 20 insurers had really given a quantitative assessment of the impact, and only half of them had given a qualitative assessment. Do you think that's because they don't want to divulge that information to the market at this stage, or because they're not in a position to do so, because they haven't got far enough?
Good question, Simon. I think it's a mix of both. In most insurers, they are doing some kind of financial impact assessment, and they do have some high-level insights on impacts of IFRS 17. But key point in IAS 8 is whether that information is reliable, and again, do they have everything that is required for disclosure? And I suspect they may not have all the information at this stage for disclosure purposes, and that's why they haven't disclosed that.
Excellent. Thank you, Bhavin.
Thank you.
I think probably we're running out of time now, so we probably need to leave things there. But I just wanted to give a huge thanks to all the presenters today for that time. I know I found all the sessions really interesting and informative, so I hope you have too. Also, thank you very much for your attention today. We do have some other events coming up, which I think will come up on a slide in a moment. In particular, for any motor insurers on the call, we have our latest IFRS 17 Motor Insurance Forum coming up in about a month's time. But anyway, if you'd like to attend any of these events, please just let us know. But I guess on that note, thank you again very much for your attendance, and hope you all have really good days.